this, folks, look at this. We're back in front of the whiteboard once again. Today I want to tell you guys why I'm seriously thinking about buying $90,000 worth of put options in a particular stock here. Now, in this video, I think the most important thing is not actually what stock I'm thinking about buying $90,000 worth of put options on. I think the most important thing today is to kind of figure out my thought process around something like this. Like, why would I consider buying $90,000 worth of put options on a particular stock? So this is going to be more of an educational video rather than a video around this particular stock. I just want you guys to get into my thought process on how I think about like wealth, how I think about, you know, potentially hedging a position, which today we're talking essentially about hedging positions, okay, and hedging wealth. And this could get to more of a very, very complicated subject, but I'm going to do my best job possible to break this down literally as simple as possible. So even if you're newer to the markets, which I know maybe half my audience is like, you know, first, you know, year of investing, the other half of my audience, you guys have been doing this for a long time. Whether you've been in the market for a long time or a short time, I hope you really understand this. So yeah, all I ask in return is that you guys smash that like button. That's literally it, guys, for the YouTube algorithm. I appreciate you guys in a massive, massive way. And it lets me know that you guys enjoy a whiteboard video like this where I'm getting into an educational process on kind of how I think about something like this, okay? Now, in regards to stock, it's RH, okay? Restoration Hardware, which is a high-end furniture store. Now, I'm personally a customer of RH. I spent a lot of money with RH in the past year as I, you know, bought, especially one particular home that I bought a ton of RH furniture, like 6 figures worth of RH furniture. So I'm a customer of theirs. I like their product. I like their business, okay? I want to be very, very clear about that first and foremost, okay? Doesn't mean always you're going to necessarily agree with valuations or, you know, potentially things that could happen here, okay? So right now the stock's around $730 a share. It's right around a $15 billion market cap or so here today, okay? The company has great earnings. Like, you look at their earnings they just reported, amazing, okay? Absolutely amazing. Great earnings. The business is red hot. Okay, and the stock is red hot the past 12 to 18 months. Like, you look at a stock chart of this stock for the past 12 to 18 months, it's red hot. It's right around its all-time high, okay? So everything's going great for RH in the short term. There's no debating that. Like literally, you look at all their numbers, it's super impressive, all right? Now, keep in mind, with businesses like a furniture business, things don't always stay hot forever. And this is very important to keep in mind, okay? Now, in regards to hedging a position or something like that, it's very important to kind of take into account my personal financial situation, right? So I have 3 houses. One is the one I'm recording at right now, the Arizona house, right? This house is worth about $800,000, maybe a little over $800,000 right now. I have a house in Henderson, Nevada. That one's worth, $900,000 plus. Then I have my main house in Nevada, which is 1.7 million plus, okay? So I have definitely a good chunk of real estate out there, right? I obviously have many millions of dollars in the stock market, as you guys know. So needless to say, you could call me very, very bullish on US real estate and on equities over the long term, right? I wouldn't have all this money in stocks and in real estate if I believed like we were in a doomsday scenario, or I didn't believe in the US economy long term or anything like that, right? I would have all my money, I don't know, maybe, I don't even know if I would have it in cash in that situation, right? But I certainly wouldn't have it invested in all these things, right? I wouldn't be willing to hold big real estate assets and stock assets. I'm a believer in the economy over the long term. I'm a believer in the US stock market over the long term. I'm a believer in the US housing market over the long term, which is why I'm willing to put my money where my mouth is and have a substantial amount of money over there. But the issue is, I am so heavily invested in things that are gonna, go right over time, right? And so as I start to think about this, I'm like, okay, sometimes your positions of strength could become your positions of weakness, right? Something very important to keep in mind there, right? We gotta ask ourselves 2 questions, right? What if the US economy goes through any rough patch over the next 2 years? If the US economy goes through any rough patch, like let's say a recession, something like that over the next 2 years, obviously this stuff wouldn't be looking good. Now, I don't think that is a very probable scenario. However, it is a scenario, right? So something to take into account there. It can come out of nowhere, right? Also, what if real estate in the US slows in a major way over the next 2 years? We know the real estate market is red hot. Like, especially in markets like I have houses in Arizona, Nevada, red hot, right? You look at any of the data out of those markets, it is insane how much homes have appreciated and are looking to appreciate in the back half of this year, right? Some folks are even starting to get priced out of the real estate market because, prices have gone up so much, right? So eventually, this is going to have to slow, right? You had a lot of people in pretty good financial situations. You had the people with a lot of money that have had more money to buy more real estate, right? And then you tag on super low interest rates on all that, like lowest interest rates we've pretty much had at any time period ever in the US economy, right? And you tag on all that, right? I mean, I have some refinances I did in the past year that are at 2-point-something% interest rate. That's insane. And then for one of these properties, this one, I took out a jumbo loan, and that jumbo loan is at a 3-point-something% interest rate on a jumbo loan. This is something very important to keep in mind. A jumbo loan at a 3% something, like that's just numbers you really haven't been able to hear about in the past, right? Absolutely insane, right? So we got to ask ourselves, what if either of these scenarios play out, okay? It's definitely a possibility. It's not a for sure thing, but what if it does happen? Well, I'm all along here, okay? So I have some cash. I always keep some cash. You guys know I like to keep 10% to 30% of my wealth in cash at all times, right? Just so I'm ready to buy deals, ready to take advantage of deals, sleep well at night, things like that, right? But I don't have any bets on anything going bad, right? I'm all long and strong. I'm long and strong on the markets and things like that, right? I don't have any shorts, any short positions. I don't have any put option positions at all in the market, right? So when you get in this situation, you start thinking, maybe I should at least hedge myself a little bit, just in case the stuff hits the fan, right? Just in case that happens, I'm hedged a bit, right? So that's where I start to think about this, right? And so in something like RH, I'm considering buying $90,000 worth of out of the money put options. Out of the money meaning, you know, it's nowhere close to whatever the price is right now, $730, right? I'm talking about strike prices that are way, way, way below whatever the stock's trading at right now, right? So the thing is, like, I'm thinking like, okay, the stock's at 730 today. Maybe it continues to trend higher over the coming weeks or the coming month or so, right? Maybe that stock just continues to drift up and then it's at 750, 770, 800. And so that valuation continues to just get pushed and pushed and pushed. It's definitely a possibility, right? So the stock just keeps getting pushed. Then guess what happens next week? Put options come out, call options as well, but 2024 options come out. They're released, okay? And so I'm going to be able to take a close look at the put options on RH at different strike prices. Strike prices I'm looking at $400, I'm looking at $300, I'm looking at $200. When it comes to all three of these, obviously they're way out of the money when you consider the stock's trading at 730, and who knows, maybe it goes higher than there. But it's also very important to take into account that it wasn't that dang long ago that this stock was in the $200 to $400 range, okay? Something very important, and we know the furniture business can be very, very cyclical. It's gonna go through some great periods, like right now is, you know, I don't want to call it as good as it gets for this business, but dang, it's pretty darn close, right? And then they have some time periods where it gets tough, right? And especially when the high end of the housing market starts slowing, right? And maybe all of a sudden you get some things kind of tacked on there. So my bet would be to hedge my long possessions. So essentially, if the real estate market went, you know, and really slowed down in a major way, if the real estate market slows down in a major way, RH's business slows down in a major way, right? And so if that happens, I'm going to at least make some money there, right? Meanwhile, this stuff might, you know, go down a bit, right? And I have more money essentially that I can buy stocks with during a time period like that, right? So here's how this kind of plays out, right? The company's been reporting such amazing earnings, getting back to the great earnings, right? Well, when this happens to a stock, analysts just keep raising their price targets on the stock. They keep raising their revenue estimates, their EPS estimates, their gross margin estimates. All those things just keep raising. And you have all these analysts just start to all of a sudden become almost too bullish on a stock, right? Because maybe they were not bullish enough, and now all of a sudden the you know, company keeps beating earnings, you know, reports this great. We just saw, you know, RH say revenue is going to be even better next quarter than it was this past quarter. When you hear all that, right? As an analyst, you start to think, man, I got to hike my price target. I got to hike my revenue estimates, my earnings estimates. And what ends up happening even to great companies is the expectations get too darn high, right? And then the company just can't hit those numbers because everybody's just too dang bullish on it. And when you have a high flying stock, even if you do hit those insanely high estimates, you can still see your stock price go down. We've seen it a million times before in the stock market, right? Where a company will hit their numbers, but You know, it's just, it wasn't that crazy beat that people were expecting. And because your stock price has been flying so high, you know, you end up getting your stock hit, right? I mean, Tesla, I'm a Tesla shareholder. I'm sure, you know, a decent amount of you guys watching this video are Tesla shareholders, right? Their company's been reporting amazing numbers last few quarters. Doesn't mean the stock's gone up, right? Some very good food for thought. And that's Tesla. That's a little different animal than an RH. No disrespect to RH, okay? Something else to keep in mind here, right? What if RH business starts to slow down in 2022 in a major way, you know? And it's definitely a possibility. They're coming off this red hot year in 2021 where the high end of the housing market's been amazing, right? And they've you know, basically just had a lot of customers to buy their furniture, right? If people are buying $1 million houses left and right, guess what? RH is going to thrive in that sort of environment. That's exactly where RH thrives in a massive way. But if all of a sudden those buyers start to go away, then all of a sudden you're stuck in this situation where it's like, okay, you know, RH really can't control their own fate. Okay, they really can't control their own fate. They can control it to a certain extent from the context of like making sure their businesses run well, making sure their brand has prestige behind it and things like that. They can control that. But if the high end of the housing market dries up for a year or two, RH can't control that. And it doesn't matter what RH pretty much does, that's just going to be what it's going to be for the short term for that company, right? So it's something very, very important to understand in a business like an RH. It's almost a little bit of a commodity business. They just happen to be on the highest end of the housing market, right? You know, a good example would be Wynn Resorts. Wynn Resorts is a stock I personally own, right? You know, beautiful resort properties in Macau and Las Vegas. Well, the thing with Wynn is, you know, if no one wants to travel for a time period, right? Their business isn't good. It doesn't matter how much Wynn does, you know, in building their brand and making sure their properties are amazing and making sure everybody has a great experience. In time periods where people aren't traveling, like, it's going to be what it's going to be, right? No different than you look at the Macau numbers for the past 18 plus months. They've been awful because no one's traveling. So it doesn't matter how much money Wynn spends on advertising or their brand or their hotels or anything. If people aren't traveling because they either can't travel or they're making that decision not to travel, the company's stuck in a tough situation. With RH, very, very similar situation. If people aren't buying expensive homes, that makes RH's business model very, very tough. If people are buying, you know, mansions left and right, $1 million, $2 million, $5 million, $10 million houses left and right, RH's business is going to boom. It's as simple as that because they're the highest end player in that market. So of course they're going to thrive, right? Also, what happens if interest rates go up a little bit, okay? Well, if interest rates were to go up, and there's a lot of talk that interest rates could potentially go up in 22. I know we've heard the Fed say a lot about 2023, right? If interest rates go up, guess what? The buyers aren't as interested to move. And especially when maybe you've already had a big pull forward of people moving, right? The back half of 2020 into this year seemed like we pulled a lot of buyers, right? Pulled a lot of buyers who might have bought in future years, pulled them to right now for many various reasons, right? And then you have inflation, you have housing prices continue to get more expensive. And then if you tack on interest rates, that's something that could definitely lead to a potential housing slowdown. Let's imagine for a moment, and this is not going to happen. I just want to give this for context, right? Let's imagine, you know, a mortgage rate overnight goes from 3% to, let's say, 5%, right? That's not going to happen overnight, but let's just imagine it did, right? Immediately overnight, like, you know, the amount of people that can afford a house or are looking to buy a house goes down substantially. That's just how it is, right? If the interest rate was 1%, you know, the people that can afford a house of a certain size or a certain amount, things like that, goes up, right? That's interest rates. And so when you tack on all these things, you think about the potential pull forward in demand, when you think about my situation with being so long everything, it can make sense to hedge a position. Now, let's say RH business, let's say I put $90,000 into RH, okay? Let's say, or, you know, with the put options, right? Let's say I buy $90,000 worth of put options in the stock. Let's say the stock doesn't go down in a meaningful way. And let's say we're 2 years from now, right? And the stock is you know, anywhere from $600 to, let's say, I don't know, heck, we can say $2,000. Let's say the business just continue to boom and boom and boom, okay? Well, that would be unfortunate for this 90,000, right? This 90,000 is now zero, right? I lost everything. So, boo-hoo for me, right? Not really, because guess what? It's going to likely boom if that's the scenario. These properties are going to more than likely be worth even way more money than they're already worth, right? the amount of gains I'll be on that were a whole lot more than $90,000, right? More than likely, my stocks will have boomed a lot more in the markets in general. And so that 90,000, I'm looking at that and I'm like, who cares? I just made another 9 mil over here on this side. Meanwhile, if things do get rough and real estate stops appreciating because we go through a time period where, you know, the market's just, you know, starts to stagnate and it's not really moving. And so maybe the housing market doesn't crash where it's like all of a sudden this house is worth da 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 and da da da. Maybe it just slows down and they're just worth the same. Okay. If that scenario plays out, RH is probably going to go through a tough time, which is probably going to mean that 90,000 is turned into 180,000, or turned into 270,000, or turned into, you know, 400,000, 500,000, something like that. Then I can go ahead and cash out of that. And if any of my stocks are down during that time period, I can plug that money in there. Or heck, I could buy a small real estate investment property with that money. Hope you guys enjoyed this video as always, and just kind of getting into my brain and kind of how I think about something like this. A little bit of a different subject when we talk about hedging a position and things like that, guys. All I ask in return is that you smash that like button. If you have any stock market related questions for me directly, basically check out the pinned comment down there. That's where you can text me. I'm trying to get back to 5+ of those questions per day. Much love as always, guys, and have a great day.